Ashutosh, with regard to the numbers itself, the deposit growth of 7.5%, first off, your initial assessment of what that number looks like, is it largely a beat? Because when I was speaking with analysts earlier today, pretty much everyone I spoke with was suggesting it's quite a beat.
Yeah, it's quite a beat, and we all were worried about the lagging deposit growth versus the loan growth which we were witnessing in the post-merger scenario for the HDFC Bank. With this deposit growth, definitely bank had shown that they are now taking up the whole deposit growth also very seriously and addressing the major investor concern regarding the liquidity ratios and the CD ratio. So in my view, this is a very positive development from the bank perspective. Yes, it will have a marginal impact on the NIMs probably in the first quarter, not in the fourth quarter or so, but in the first quarter. But if you look overall, the type of things which they realignment which they have done for the home loan portfolio of HDFC Limited, probably we may not see any major impact even on the NIMs front.
Sure. Gurmeet, sorry, I also want to welcome, we're joined also by Gurmeet Chadha, who's the CIO at Complete Circle. Welcome, Gurmeet. It's good having you here. Gurmeet, your views, first off, with regard to the numbers itself, a very strong set, especially on the deposit front. On the advances front, do you think it's a purposeful calibration?
Discussing HDFC Bank right now?
Yes, please, Gurmeet. Yes.
No, I think that this is the update probably which has got some concerns addressed. In my view, I think what I'm impressed is with the retail. You have to look at numbers quarter on quarter, as rightly mentioned on the screen. YOY can be misleading post merger. So I think their advances, figure is now 25.8 lakh crores. The gross deposits actually has grown 7.5% quarter on quarter. That's like they almost added 1.66 lakh crores deposits. My sense is their market share in deposits could be upwards of 25% when the overall numbers come in Q1. This is quite a good number. Also, the credit deposit ratio, which was some concern, improved to 105%, which means they are not at the market was because if this ratio had further worsened, which means the cost of funds would have gone up and the margins would have again got impacted. I would be interested in knowing the NIMs now. There'll be some assistance also from the treasury gains with 10-year GSEC closing at about 7.05 for this quarter, which is March ended, versus the yields being around 7.15, 7.20 in the December quarter. So treasury gains should also assist. So I think it should be a good quarter for them, and I think which is what the market was looking at. Can they just turn around after the merger? How long does it take to get the CASA ratio back in the 40s? It's already jumped back to 38% plus. And this was available. Last 3-year returns of HDFC was lesser than the FD had you done in HDFC Bank for 2 to 3 years. So I think at some point of time, I think it should. I think re-rated, got derated for last 2-3 years. My sense is another good quarter and the stock could be right back where it belongs to.
Sure. Point taken, Gurmeet. So those are initial thoughts. Let me again take it to Asutosh. Ashutosh, the concern has been, and Gurmeet, you as well, the concern largely has been with regard to loan to deposit ratio. Now, I've just done some quick back of the envelope numbers. 112% was the LDR at the end of Q3, basis the Q3 numbers. It's fallen to 105%. And the long-term average that HDFC Bank clocks is between 85 and 90%. Ashutosh, basis your numbers, your math, basis your estimates, how quickly can HDFC Bank go towards that maybe even 95 or 90% number? Because that's where the street will start to see comfort, right?
No, it is not right comparison to take the pre-merger scenario of HDFC Bank and taking that numbers. The simple reason is that the long-term loan book is being funded by some of the long-term bonds of HDFC Limited, and it will take some time to go to that number. Even from the RBI perspective, if you look at multiple time press and everyone has asked this question out there, RBI also don't want to create a scenario where a home loan portfolio, which is an average in India across 8 years, will get funded through a term deposit or a retail CASA deposit of majority far lesser than that. So I don't think so that we need to compare at 85 or 90%. Even if it comes near to 100%, it will be much more comfortable. What more we need to see really is the NIMS. NIMS has dipped no substantially for the HDFC combined entity, and how the NIMS trajectory is going to be there, and that's where the direct impact on the profitability will be felt from that angle. So we need to look from that angle more rather than just looking at a CD ratio. And even from the CD, it's more important to look from the LCR perspective, not absolutely CD ratio.
Okay, right, Asutosh, I take your point. Gurmeet, you have a very similar opinion with regard to how LDR should shape up. Do you think 100% LDR would therefore start to see loan growth start to come again? Is that how one can look at it?
I think next quarter, hopefully, I mean, so they are down to 104, 105 already. I think next quarter should be closer to 100 in my view, because a lot of the deposit mobilization is momentum. And, I've been speaking to a lot of friends, being an ex-HDFC banker, clear, sheer focus they have on deposits. It's clearly visible now in numbers. I think that momentum will help them do that. Also, I think, the timing of the merger from because the cost of funds kept going up, interest rates were going up, also had a role to play. When you take over 7 lakh crores of loans on your book, and you want to mobilize deposits, it takes time. I mean, it's HDFC which is able to do that. To give you a perspective, they've added deposits in this quarter, which are total deposits of an IDFC or a federal bank. So that's the kind of a machine it is, and they've been opening 1,000-1,500 branches. So they're doing a lot of OPEX as well. In terms of being ready, in terms of being digital. I think one thing which stands out is also the improvement in CASA, and that is where the NIMS will come back, as I said, and that's something market will watch very closely. Also, the breakup of the loan advances is interesting. So if you see the retail loans are up 3.7%, the rural and the commercial loans are also up almost 4% quarter on quarter. It's the corporate loans which have shown some slight degrowth Q and Q. So even the mix of advances is good, which would aid the profitable growth, if I can put that metric. And I think that market should like when the final numbers come.
Sure. Gurmeet, you are known as an investor in HDFC Bank. You've been bullish on it over the last couple of months. Whenever I've spoken with you, you've been quite bullish on it. Now, just one piece that's been bothering me since the morning is they spoke in Q3. The commentary that came through was with regard to deposits. They were not willing to grow their wholesale deposit book. In fact, the wholesale deposit book had degrown. This time around, they've actually leaned on the wholesale deposit book to grow the overall deposits. So retail grew at 7, wholesale has grown at 10.9%. So do you therefore believe that there has been a shift in strategy of some sort, or do you think the environment has started to shift, or is it just Q4?
I think it's a bit of all three, as you rightly said. In March, typically banks tend to do that. It's not that HDFC has done. You'll find that in there's a sheer pace of competition on deposits. It's very evident when you speak to family offices, corporate treasuries, and HNIs. It's a bit of a March phenomena, bit of a merger phenomena, bit of pressure from market analysts, and it's a combination of all three. But I don't read too much into it. As I said, the CASA growth is also impressive. And that is something I will trust. So had it only been wholesale, I would have been a little worried, but if it's a combination of that, it's perfectly fine. Also, the rates are also peaking out. So you will also see softening of rates. So it could be a bit of a March phenomena also. Also, in my view, I think important thing to note is that on a 25 lakh crore balance sheet, if you do this kind of growth numbers, it's job well done. And even some of the other banks, I think even Federal posted very good set of numbers. I think financials are due, in my view. It's been, if you see the bank nifty is hardly up 17-18% last 2 years, from let's say 41, 42 to 47,000, and the EPS growth is almost 55%. It's a classic de-rating which has happened on financials and NBFCs. NBFCs probably the de-rating is more. I think as the cycle turns this year, liquidity eases, rate cut cycle starts at some point, I think financials should come back, make a strong comeback.
Okay, Gurmeet, we'll come to Federal, we'll come to RBL, we'll take your views on that as well. But before that, Asutosh, one last question with regard to HDFC before I cap that off. Asutosh, they've guided for doubling of the loan book in 4 to 5 years at the time of merger. Possible given the environment and given everything that has changed, because that is something that hasn't been addressed, especially in the recent Goldman Sachs conference, where they spoke about, or rather Shashidhar Jagdishan spoke about how they might calibrate loan growth. But do you think loan book will double, or that may not happen now?
Like if you see the type of organizational structure or the machine which they have created on this front, if they want, they will be able to do this. If they want to control that, they will be able to do the same point of thing. I don't think so that the opportunity is there in the front of HDFC Bank. That the way our economy is growing it at this point of time is clearly showing that the in a 4 to 5 years, banks can double their loan growth. But if suppose we just need to keep one thing in mind is that the priority sector lending that need to be catched up along with the loan growth. So that's why, and that is a very important perspective from the NIMS, and that will be start kicking in somewhere 3 years down the line. So from the future growth perspective, we need to check the balance between the growth in the normal loan book and the growth in the priority sector loan book for the HDFC Bank. I'm hopeful that they will be able to deliver on that front. The strategy is working in the right direction, and no, but we need to wait and see on that front. They can able to do it, but they may calibrate in between, like what they done for the fourth quarter in this year.
Okay, I take your point. Gurmeet, NIM recovery on everyone's radar. Very quickly, because I need to slip into a break. Very quickly, when do you see NIMs recovering now that we have visibility on deposit growth?
I think some improvement this quarter. I think the better would be when you will see significant drop in overall cost of funds. The 10-year is dropping, so there will be some impact. I think when the bond inclusion happens in June, my sense is the overall cost of funds for the system will come down. And that is something which is more structural. So maybe bigger improvement in Q1 of next year, post Q1 of next year, I think is what. But the market may start pricing in. Also, there is a bit of an FTSE reject. You'll see some passive flows also coming, likely more favoring towards HDFC and toward lesser toward overall financial. Also, I think some of the NBFCs will come back. I think they've been a bit of out of favor with RBI actions, focus on more compliance on the NBFC front. I think there is some good quality NBFCs. Already Bajaj Finance and the likes of Poonawalla have shown some recovery. I think you broadly see better run NBFCs also making a good comeback.
Ashutosh, how do you look at some of these numbers and at the system as a whole? Do you think that this is just seasonality, or do you think that there is a strong, solid growth of deposits which are being targeted by these banks and they are achieving that?
Yes, there is partially there is a seasonality in the fourth quarter, which we cannot deny upon it. But as maximum of the banks are now focusing back on the deposit, they have put their sales system to acquire more and more customer deposit part of it. And that is also working. And only thing which we need to going forward focus upon how they balance between these two part of loan growth versus deposit growth, or even they are trying to use some other source of funding, like Gurmeet was discussing just now that India is going to include it in the bond market, and probably we are going to see some change in the funding mix of the Indian banks. Like globally, if you look at banks are not only funded through the deposits, they are also funded through the other source, and probably we may see part of funding coming of the banks from the other sources over and above the deposit part of it. So with India's inclusion in the global bond index, probably that market will be start getting focused also from the next year onward.
Okay, Ashutosh, Suryodaya, I want to try and focus on 14% sequential on advances. How do you look at and how do you build in such numbers? Do you think that there could be a pocket, especially in the small finance bank segment? AU also grew 9% both on deposits as well as on loans sequential. Do you think small finance banks are in a bit of a sweet spot when it comes to growth, and any concerns in the sector space that you look at?
So yes, especially when we look at a small finance bank, CD ratio become very important. Like my view is that larger banks CD ratio may not be the right, because they have a very different portfolio and they also take funding from the larger bond and other route. Whereas in small finance bank, they are primarily take their funding through the deposit route on that front. So balancing the deposit growth is very important for any small finance bank. Maximum of them are delivering very strong growth, because especially in MFI sector, we are witnessing a very strong growth from the last 4 quarters. And a small loan, AU is not purely MFI, it's having a lot more of a small other non-MFI personal small loan. So we are witnessing a very strong growth in that segment, and these banks are very well positioned to deliver on that front. What we need to see the balance, how they are able to, at what cost they are able to raise the deposit, that will be important to watch out for. And is there any asset quality issue is getting emerged out of this? We are into the election session. Till the time we have not got any loan waiver or announcement from any of the political party, so we are not much concerned. But if suppose these real things start coming in, then probably we need to be a bit cautious upon some of these banks. But at this point of time, I don't see any risk.
Okay, and Asutosh, what's the pocket you like in this? You also had something like a South Indian bank come out with slightly weaker numbers, Karur Vysya and the like. What is it that you are liking within the banking space? Not just for Q4, but also in terms of valuations. Is it private sector? Is it public sector at the moment, even now? Or is it the small finance banks or the mid-sized kind of banks, something like a Federal, Equitas and the like?
So my preference at this point of time is more towards the mix of a large private and public sense. So the larger banks which are better positioned to take advantage of what is happening in the economy at this point of time. And given we are going to enter into the interest rate cut cycle, so larger bank will be able to take the benefit of that also in a first sense. So both on public and private, larger bank will be able to get benefit. And there in the, if you look at the public sector banks, it will be SBI, Bank of India, Indian Bank. These will be the major beneficiary. Bank of Baroda is also doing quite fairly well on that front. Bank of Baroda and Canara. In the private sector banks, HDFC banks looks very attractive to me, and a simple reason is if you look at the type of de-rating which we have seen, and if they start now post merger they start delivering on a value proposition which they have promised in the last 3 to 6 months, then probably slowly they will start catching up the investor attention again, which was lacking till now.
Okay, Gurmeet, your quick views, your last take with regard to the banking sector as a whole. What is it that you are finding value in? Of course, HDFC, your preference is very, very clear. But outside of that, would it be the larger ones, Kotak, ICICI, Axis? Would it be large private, PSU, large, small, your mid-sized banks, Federal, yes, RBL? Or would it be something like a small finance bank?
So actually a combination of that. So I think in mid-sized banks, we like Federal Bank. I think the retail loan mix is improving. Right now, the mix is now 55% towards retail, 45 is wholesale, and they're growing the retail book almost ahead of the system credit growth. Last quarter also, it's 20% YOY, and sequentially also probably seems to be gaining market share. The management, I think, should meet the guidance of 20% credit growth. CASA still remains a challenge, but I think gradually I would like to see that number go beyond 30%, which is the current CASA ratio. It's actually a tad below 30. Also, the mix is changing, so they're focusing more on high-yielding retail assets like PL, credit cards, bit of microfinance as well. So we like that. We also like PSUs like SBI and Bank of Baroda. I think Kotak, because the balance sheet is much smaller than HDFC, should see faster turnaround. Waiting more updates from Kotak compared to HDFC, their balance sheet is 1/5 of that. So you can probably see a better turnaround considering the share size and the strength Kotak has as a franchise. As I said, I'm looking at some NBFCs. I think Bajaj Finance also is due. I think with the housing IPO and they're subscribing to the right issue, plus has got derated a bit in the last couple of years. Also looking at some niche NBFCs and small finance players. We like Grow Capital, which is focused on MSMEs.
Right, plenty of names to think about, and Bajaj Finance's numbers also awaited. But it's been a good, meaningful conversation, I hope, for viewers as well. Thank you, Gurmeet. Thank you, Asutosh, for joining us and giving us all of that perspective. Completely out of time on this edition of the show. From myself, everyone who put this show together, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.